So today we're going to do a bit of an update on one of my stocks that reported earnings on Friday. Now the earnings they brought out on Friday were really impressive. They were 10 out of 10 earnings, and the crazy thing to see is we actually had a stock that brought out 10 out of 10 earnings and it actually has gone up. Normally, recently we've seen a lot of stocks bring out really good earnings and it's moved in the wrong direction. So maybe a bit of normality starting to come in here. We'll see what happens. But this is my third biggest UK holding that I have in my portfolio, and it is a bit more of a mature investment now. It's I invest for 2 to 5 years and this is now entering. It's just gone past the 2-year mark of holding, so a little bit of an update in it, where I see it going, and if I'm any close to selling it, if I'm still holding, if I potentially could buy any more. I'll do everything like that for you guys today. Now just to let you know, on the Patreon I have put an exclusive video up on there which was voted by the guys on the Discord or on the Patreon, which was to talk about the 10 stocks that are the highest ones up on my watch list. So these are the 10 stocks that I don't own but are the closest ones to me buying at the moment. And yeah, exclusive video on Patreon, so if you do want to see that, link is in the description. I also post when I'm buying and selling. There's Discord with 600 members on there to talk to and everything like that. So yeah, just a little shout out to that one. Now getting on to the stock today, Hollywood Bowl, ticker symbol BOL. Now the stock was up 9% today after this update that it gave, and the update, like I said, was fantastic, 10 out of 10. Like I said, a stock that I've held for over 2 years now, starting to get to the more longer term hold. And I have talked about this quite a few times on my channel, but in case you don't know, they are basically a 10-pin bowling alley, but they have also now diverse the income to also have in their locations the 10-pin bowling alleys. They also have bars and they also have arcades. So I really do like how it's not just one income, that they only make money from the 10-pin bowling. They generally put these in a lot of like leisure parks with cinemas, restaurants. So even if you're not going in Hollywood Bowl for necessarily the bowling, you might still go in for the bar or go to the arcade. And I think that's really good how they have really good location points, and also the income is quite diverse at the moment. So this was the half-year trading update that they came out with, and the really impressive thing really is that Hollywood Bowl at the moment, this is the first kind of full period of time operating. So many periods of time previously, whether we go back to 12 months ago, they were basically still having to shut down a lot of the locations. Leisure locations have been hit absolutely hard by the lockdowns, and they've had hardly any proper operating time, and we're now starting to enter where they're operating for a good period of time, and now the results are really starting to show through. So the half-year trading update opened up with excellent first half with strong revenue growth and cash generation. 2 key points here was record first half year revenues of 91 million, up 659% compared to financial year 2021. Obviously that's because a lot of that period they were in a lockdown situation, so it's not that hard of a numbers to beat. But the next part was really important. 36.3% total revenue compared to financial year 2019. Now, what's really important about that is that that's the last operation period where they actually had before CV times, the normal times. And now that we're in 2022 and compared to the last proper year they had, we are now currently 36.3% ahead of where we were in 2019. 26% on like-for-like sales, so obviously that's still majorly good. And then what they've done recently, they've had a bit of revamp of some venues, and also they've opened up some additional venues, and you can see that has really generated into the revenue growth. And yeah, we've got a very good growth coming here compared to what it was doing pre-CV. And this is, like I said, the first time in a few years where we've actually had them able to do some proper numbers. And if you follow the story, when they have been opened in between where they've been closed for the CV times, if you look to the game plan of opening venues, you kind of knew this was going to happen, and this is what I've been saying for the last 2 years. They also said that they had record cash generation from operations. I should have highlighted this bit here, I have no idea why I didn't. The net cash position was at the 31st of March 49 million. Now it's important to say they didn't actually mention any proper profit metrics inside here, but we can do a little bit of quick maths here to realize they have now got 49 million in cash. And before this trading update, if we go on to Simple Wall Street, which if you want to join, there's a link in the description here. If we do go on the cash balance previously, you can see here that they were sitting on 29.6 million. So it does kind of give you a little bit of an update on what that cash position is and how much of that revenue has actually gone to the bottom line. And the current suggestion would be that during this period, they did make 19 million in this period of time, if all these numbers do line up correctly. It also came out to say that the group anticipates that its full year performance will be ahead of current market expectations. And that would make a lot of sense because at the moment, analysts are predicting around about in September time, 150 million to 27 million profit. In 2023, 161 million to 27 million profit, and a little bit higher going forward. Now, if these numbers are correct and they do the same period in the second half, which isn't always a great comparison, because obviously there's going to be times where the trading will be a little bit stronger, maybe a little bit weaker, especially when you think about, the winter period. That could be a very popular season. It does suggest that at the moment, what analysts are predicting, the company is going to come way ahead of expectations. We're talking 10 to 20% above expectations right now. So when we go back to the point of view here that the group anticipates that its full year performance will be ahead of current market expectations, when we do compare that to Simple Wall Street's expectations, that does make a lot of sense. It does seem like at the moment Hollywood Bowl is trading a lot ahead of these forecasts right now, and that is also very important that, like we said previously, when we look at pre-CV numbers, this company now is way ahead of where it was pre-CV revenue and profit at the moment as well, which is really good. It also said that there was 3 refurbishments, and also there was 2 new centres opened up, one in Birmingham and a put starts in Harrow, and there's also going to be 2 new centres in the second half that open up. It did mention about controlling costs. As we know, there's been a lot of inflation pressures at the moment. It also went on to say how it's going to manage that. One of the ways that it's going to do that is actually by placing solar panels on a lot of the centres if the landlord give their consent. And going back to the dividend, the announcement of the dividend coming back, they said that a further update will be given at the group's interim results for the 6 months end at the 31st of March 2022, expected to be published on Wednesday the 25th of May 2022. So right now we have a company that is performing way ahead of what analyst expectations were and way ahead of where it was in the pre-CV times. Now obviously because it is generating so much cash now and it's making a profit and it's also increasing its revenue a huge amount, it was always a matter of time, I believe, until we did see the dividend come back. Now the interesting point is what the dividend is going to be. Now if we do look at Hollywood Bowl's dividend history, which is provided here by Hargreaves Lansdown, you can see they introduced the dividend here in 2017. Now when they introduced the dividend in 2017, they did actually pay an interim dividend, they then paid a final dividend, and they also paid a special dividend. So it'll be interesting to see what dividends are reintroduced to the company. Are they going to introduce an interim dividend, a final dividend, and then will they actually add a special dividend on? And it'll be also interesting to see what Hollywood Bowl announce as their special final interim dividend. If they do a special dividend, what are they going to do? Because obviously when you take here, the company does historically increase their dividend, and you can see here that when it was introduced in 2017, that's why it says 2000%. In 2018 it was an 8% increase, and in 2019 it was an 18% increase. So it's going to be interesting about how conservative they are or how aggressive they are introducing this dividend. Are they going to just do an interim and a final and play it safe to start with, or will they go back to also paying a special dividend? And the other question that we have is that because the company is obviously way ahead of where it was in 2019, does it come in with the same sort of dividend, or is it actually going to pay a hike up in the dividend and they're actually going to grow this dividend by 10-20%? So we could potentially even have a dividend that was even better than 2019. So there's still a few questions about what exactly the dividend is going to be about and where it's going to be around. You can see pre-CV times are currently paying around 11p a share. According to Simple Wall Street, they're predicting them to do around 7p, so not as much as the amount as pre-CV times. If they do pay around a 7p dividend, that will mean they, at the moment, will get a 2.9% dividend yield. But if they potentially could go back to their old dividend, if we look at Simple Wall Street, that would actually mean that we would be getting around about a 6.2% dividend yield. So that would be very good if we saw them numbers coming in. And then if you start running, okay, potentially, could they actually pay even a higher dividend than 11p? This could be even higher. So there's a lot of questions exactly what the yield is going to be off that dividend. Personally, for me, I'm very happy whatever the dividend is going to be, and I'm sure management will make the correct decision, but it will be very exciting in a few months' time to see what dividend yield we will be getting off this one. So just finishing off with my overall thoughts on this company. Am I buying it? Am I holding? Am I selling? At the moment, I have no plans to sell because I think the company is in a stronger position than it ever was, and I think I'm only just starting to get the rewards 2 years in from holding this position, and I think I'm going to carry on holding it because I still think the company's performing very well. I think the share price will perform still give me a decent return every year, somewhere around a 10 to 20% return every year. And as well as that, now I'm also going to be picking up a really nice dividend going forward. So I definitely have no plans to sell because I still think there's upside here with the company performing, and I also think I'm going to get a really good dividend yield. When it comes to buying at these sort of valuations, I still don't think it's an awful valuation. However, it has just recently had a very big jump, and when this stock does tend to have quite a big jump, it does normally have a little bit of a pullback, so we'll see what happens there. I would be tempted to actually buy this stock, but for me to buy this stock, it would have to come down to the round about the £2 level. If it gets around to that £2 level, which can happen, especially with the stock market that we're in, we've seen so many erratic prices, it can happen. If it was to get around to that £2 level, that would be where I would be interested to be buying. But I still think this company has a very bright future in the next 2, 3, 4, 5 years going forward. So yeah, I'm very excited to still carry on holding this company, still see some share price appreciation come in, and also now potentially be looking at a really good dividend yield in the next coming 12 months. So yeah, really good update from this company, and it just kind of comes down to the point of view of why you hold for the long term. And after 2 years of holding this stock, as you can see here, I am very much now getting the rewards of that investment for the long term, and it's only just starting. I think the next kind of couple of years as well could be just as good as a reward and getting some good return off it. So yeah, really good update. I'm really happy shareholder, and just a really good update in general. So hope you enjoyed it. Congratulations to any of you guys that have been following this one with me for the last 2 years, and yeah, I'll see you in a bit.